Okay, try to sort this out for us, if it has any implications for the market. Oil prices heading towards $100 a barrel. Folks at Totafina F says, well, that's good, but it's not so good. We've touched 80, we've touched $82 a barrel. Folks are no longer looking happy on social media these days. When you push out an oil price at 80, then folks says, hey, what about the under recovery in petrol prices and what have you? How much good can the Buhari's administration make of this oil price rally, looking at the higher cost at which the government faced in borrowing from the outside, and also as we see the September bond stop rate heading slightly above 15%?
Yeah, so for me, there are a couple of things to consider with oil prices, right? The first is that we came into the year with an expectation that they will average around $55. So far this year, they've averaged almost $75. And like you said, they've broken the $80 mark for the first time this year over the last couple of weeks. Despite that, we've still seen all the issues with foreign investor sentiment to Nigeria, right? So oil prices themselves are not a silver bullet, right? At the same time, one reason we have seen this is around sustainability, right? So the question is, how long are prices going to hover around these 80 levels? Even if we touch 100, the market isn't going to respond as strongly, or investors aren't going to react as strongly if they don't see it as a sustainable level for, say, an 18-month period, because that gives the government the chance to really exploit that increase in revenues, right? So part of why we haven't seen that much of a response is because, you know, for 2019, 2020, we aren't expecting prices to be so strong. In terms of the under recovery, I do find it a bit puzzling actually when people raise this as an issue, because there's a strong public pushback against the removal of effective subsidy and against the liberalization of petrol prices, right? It's something that the public has basically said we don't want to do. Now, given that, you don't really give the government much options when prices go to $80. They have to pay some sort of subsidy, right? Yes, it can be more transparent and all that, but the reality is that the first best solution is to liberalize prices, allow them rise, and until the public accepts that, we may need to live with some level of corruption and untransparency with regards to how the subsidy is paid, who pays it, how much, and so on, right? It is just a reality of the regime that we have chosen for ourselves.
But Michael, in the middle of all this, Godwin Emefiele, the central bank chief, is burning the midnight oil, keeping vigil over Naira-dollar exchange rate, defending the Naira with that firewall around it. And the only bullets that Emefiele has and his team, the only bullets they have is the oil price and oil production. So how much more vigil do you think they can keep with the pressure that we're seeing coming in as strong headwinds for Naira-dollar relationship in the short to medium term?
Yeah, I think we've already seen pressure this year, frankly. And oil prices are going to boost reserves, or at least stem the decline that we've seen in the last couple of months. What interests me about the Nigerian foreign exchange market is that over the last couple of years, we've sort of created this multiple exchange rate window regime, and in some way, it limits the impact of external pressure, right? We have seen a bit of convergence in the NYFEX and NAFEX windows, but despite that, the official rate still stays at 305, right? So apart from external reserves, this multiple exchange rate window and the flexibility it gives the CBN, although it isn't efficient, actually gives it a lot more leeway than other countries to buffer against the pressure on the currency coming from, trade wars and the US Fed and the elections and so on, right? And you see it in the fact that the Naira at the NAFEX window is only down about 1 or 2% this year compared to peers in Angola. I think it's down like 9%. Ghanaian cedi is down about 13%. The Turkish lira was down about 40% by last week, right? The Russian ruble was down almost 10% at the end of last week and so on, right? So we've enjoyed a much better time, and that comes really for better, for worse, from external reserves, but also partly because we have this bizarre exchange rate policy that doesn't allow market forces to filter through the whole market.
So, what do you think lies ahead in the fourth quarter with all the governorship, some of the governorship elections that we have, and the rhetorics around who is competing for the office of the CEO, that's the president, next year, and all of that, all the jostlings and cross-country meetings and things going on, and the primaries as well, which is getting to fever pitch this new month of October, of course, starting from this weekend, not with the NLC strike. Perhaps some of those folks are going for those primaries who have no petrol in their vehicles, whatever that happens. Where does that leave the fiscal and the market street and the rest of us for the last 90 days of 2018?
Yeah, I think everybody from the market to the economy are going to have their eyes peeled on the TV, watching the developments on the electoral front, right? The reality is that for the last 3 months of the year now, that's really going to be focused, right? Particularly because it is, looking like it's going to be a fairly contested or well-contested race. And that throws up a lot of uncertainty, right? And the market is going to be reacting, both domestic and foreign guys, at least the foreign guys that haven't sort of jumped ship by now. So the reality really is that on the economic front, we're going to go to a bit of autopilot, and most of the activity is going to be demand-driven in terms of election spending. And everybody's going to have their eyes peeled on what's going on, first of all, with the primaries, and then post-primaries, how, the different candidates begin to sort of begin their campaigns, and crucially, what sort of promises they're making, because that sort of gives a little bit of an indication of what you can expect post-February 2019.
Michael, the news came in this week that the president has signed off on the bill that would eventually be used by the Nigerian Stock Exchange to go public and become a company limited by shares. This is good news. How do you think this will move forward at this political period? Should it be delayed, or should they just go ahead, not minding the political environment?
I think the reality is probably the exchange will not really act on it for now. It was approved by shareholders, I think, middle of last year. And now the president and the National Assembly has passed the bill, right? But I think the next step now is, okay, discussions on when they may want to do it. And even if the elections were not happening, they may not have chosen to do it at this period, right? Because also from the exchange perspective, right, if I want to listing at a time when prices are depressed and sentiment is low isn't the best time, right? Although their incentives may be slightly different from a pure non-public interest company, right? But I don't think this is the right time for them to do so. I think they may begin discussions on timing and process, and perhaps in 2019 we can start to see that happen.
Michael, so did you see my tweet yesterday afternoon, late afternoon yesterday? Did you see it? I'm not sure. I'm sure you missed it. I was taking a nap.
I'm not sure.
I'm not sure. So I was taking a nap because the economy was taking a nap. So because politics is active. So if we can't demutualize the exchange in this period, and because everyone is watching the political television, those of us who are in the business of economy, investment, and markets, maybe we need to take some nap. Look for it on your Twitter handle, on my Twitter handle. You'll find it. That's the picture. taken by one of her staff, caught me napping yesterday. So let's have some nap, go home, or go back to your office. And after that, don't sleep on the business, on the markets. Have a great weekend, Michael. Thank you very much for all the insights you provided us. Let's take some nap over the weekend. Then we'll get back together in the new month.